Now, reasons why I want to invest in hedge funds and people invest in hedge funds are investors seeking alpha, the alpha that the hedge funds generate. And secondly is institutions looking for diversification in the form of the uncorrelated returns that the hedge funds offer. These are the main two reasons why people invest in hedge funds. Now let's consider the fee structures of hedge funds. In general, hedge funds offer a 2% administration fee, which is used to pay off the operating costs of the hedge fund, and a 20% performance fee, which is where the profit and the profit maximization of the hedge funds come from. Now this is just the general structure, and it's the 220 rule is what the industry calls it, but it can differ. It can be a 1% administration fee or a 15% performance fee. Now let's consider some of the conditions that these fees are subject to, and these are the most basic ones. Today we'll be discussing hurdle rates, high watermarks, and lockup periods. Hurdle rate is a specific return that must be achieved by the fund manager before the profits of the fund can be determined. This is often in the form of a risk-free assets return, a short-term risk-free asset. And then we have high watermarks. High watermark is the net asset value on the most recent date that performance fees were paid out to the fund manager. And performance fees will only be payable to a hedge fund manager on the profits it makes above the high watermark. And we have lockup periods. Lockup period is when an investor comes to a hedge fund, makes their initial contribution, and in the mandate it will stipulate that the initial contribution will be subject to a lockup period over 6 to 12 months where the investor cannot redeem his funds until that period has ended. And we can also have segregated lockup periods and something called a soft lockup period, which is where redemptions can be made during the lockup period but will be subject to an extra redemption fee. Then a very important concept to consider is that hedge funds are performance seekers and not asset gatherers. Two main reasons behind this are the incentives that the hedge fund manager has and the fee structure. And more than anything, the main reason is the specialized and sophisticated strategies of the hedge fund manager. This is because these strategies often experience scalability problems. So in other words, a hedge fund manager will not risk losing their alpha, their absolute returns and their profits in order to gain assets under management over a certain level. Thank you. We move on to Jacques.